All right, welcome back. We're going to get into the conversation now with the management at Shipbrokers. Ashok's joining us this morning. Ashok, good to have you with us. Lots to delve into here. Now, for the sake of our viewers, who've perhaps who are a little bit new to this, talk to us about this tanking of rates that we've seen on tankers and what the word contango really means.
I can't hear you. I can't hear you.
No problem. Let me try again, and otherwise we'll fix the line. But for those that are new to the subject, the move on tanker rates that we've been seeing. If you could talk to us a little bit more about that, as well as what the word contango means.
Okay, let me just start from the basics. There is, of course, as everybody is aware, there's been a massive demand destruction as far as the oil demand is concerned. The average consensus is about 25 million barrels per day. That means since the coronavirus, over the last 30 days or so, the demand destruction is to the tune of about 25% of global demand that existed maybe even 6 to 8 weeks ago. So now, because of this demand destruction, obviously low demand is causing a depression of the current spot price in crude. That spot price, of course, has come down to the historically low levels, definitely the lowest we've seen in the last 12 to 15 years. And this low spot price does not mean that the future price of oil has been impacted fully. The future price of oil, let's say 3 to 6 months down the line, is still averaging about $40 a barrel. So the difference between the spot price of oil today and the spot price of oil in the future, 3 to 6 months down the line, is the term that you call is related to the term contango. That means the spot prices are lower than the future prices. So it makes economic sense for the players, for the traders, for the oil companies to hold on to buy oil at the current spot prices and sell them after storing them for maybe 6 months, 8 months, a year, whatever their game plan is for whatever period they can buy or whatever period down the line they can find a buyer. So this contango basically leads to the incentive to store oil. So the cheapest way to store oil is onshore store. But because of the glut of oil over the last 8 weeks or so, that's been flooding the market, a lot of it is due to the demand destruction due to the coronavirus. And of course, there has also been an assault on the price of crude oil. By the biggest producer in the world, that is Saudi, and the combination of these two factors has brought oil down to very low levels. Which has given incentive to the traders to store ashore where they could help it, but shore-based storage is more or less full, and the next option is to store it on floating storage on tankers. So that's why the incentive or the market for tankers has gone up to the sky-high levels because of the demand for tankers to store crude oil. So tankers are predominantly used on spot trade, where they load the oil from A and go and discharge it to B. But most of the deals that have been taking place over the last 4 to 6 weeks, or even 8 weeks, has been each deal, or almost all deals, have a storage option tied into them. That means if it's a spot lifting, there's always an option for the trader or the buyer to float the cargo for 3 months or 6 months, and the rates have become extremely high. The rates for a VLCC today for 1 year are about $85,000 a day, and that was deals that were concluded 1 to 2 weeks ago. If you try to go into the market today to look for a ship, for 6 months, it may well be over $100,000.
Okay, so we are definitely then seeing a change in an increase in the price of assets as well. Is there more ship trading, Ashok, that's going on? And, also coming to, what's happened on oil, before we saw the collapse as well, what were the rates on average and how much have we seen an increase since?
Rates of what? Ships, charter hires, or what we talking about?
No, before oil collapse, so what were the rates that we were seeing as well on average, and how much of an increase have they seen? And also, secondly, just as a follow-up to your last answer, are we also seeing an increase in ship trading activity?
Well, as of 6 to 8 weeks ago, ships were at $25,000 to $30,000 a day. On the trunk trade, loading from the AG and going and discharging in the Far East. Today, as of yesterday, the rate was about $220,000 a day. So it's gone up by almost 7 times in 8 weeks. And paradoxically, as far as trading of assets, asset trading is concerned, even buying and selling of ships, in a market like this, it'll be very difficult to get an owner to get rid of a ship in a market like this. He'll try to keep trading it as long as the market is firm. And the price that he'll ask for will will have no correlation to the asset value of the ship right now. So there is next to no buying and selling taking place as we speak.
Okay. Ashok, this kind of a scenario is not going to last. I mean, the world needs oil to move, and it is not the world has stopped moving. Yes, in India there is a lockdown, but not everybody is really following a lockdown. What about the real demand? I mean, oil had a real demand. The real demand cannot become zero.
Okay, the world has come to a standstill, right? It's unprecedented. They know that the main consumers of crude oil or the main consumers of petroleum product are the airline industry and of course the car, the gasoline and jet fuel, basically, and gas oil, the gas oil as well. So these are the three main products consumed by the global economy as a whole. Aircrafts are not flying, so that your jet fuel demand has tanked there. There's hardly any driving going on. United States is the biggest consumer of gasoline. There is no driving going down because of the de facto lockdown. And gas oil, of course, there are no trains running in India. There's, gas oil is also a gas oil is also a transportation fuel. So there is a huge demand destruction there. But let's say it's all come to a standstill. Nobody's actually, nobody's actually using these products. But the infrastructure to use it is still very much there. All the cars still exist. The factories still exist. I mean, the aircraft are standing parked in airports. The cars are parked in garages. The trains will start running eventually. The power consumption will increase eventually. But that will only happen once the COVID-19 situation is behind us. And how long that is going to take, of course, is a moot point, and nobody is able to put a finger at it. But we do believe that once the COVID, it's all directly proportional or directly related to when the COVID situation has been overcome, and how long it takes for people to get the confidence back in the economy, and where the social distancing norms have been eased. So I guess the consumption of petroleum products will be directly proportional to how long it takes for the social distancing norms to dissolve and things to come back to normal again.
Okay. All right, Ashok, really appreciate your time.